All right, bull runners, welcome back to the channel. So, Bitcoin crossing $30,000, up nearly 12% in the week. Ethereum up 5%, XRP up 7%, BNB up 4%, Solana up 34%. Then you got Cardano, Dogecoin, Tron. The whole markets are up right now. Chainlink even up 21%. Regardless of the FTX lawsuit, the negative news coming out about Gemini, we see Bitcoin rallying over 21% since September. And if Bitcoin can hold, the $30,000 support, the next stop for Bitcoin would be the high of the year. And if we look right here, we can see Chainlink has broken out from this downward trending resistance line. If Chainlink can clear $9.50, then we're looking at $12 to $13.50 next for Chainlink. Looking at Solana is up 70% since September on a massive rally. However, the RSI is sitting at 83 right now. So in this video, we have a lot of news to talk about, and we're going to get into XRP as well too. Even though XRP is only up 15%, having a lackluster performance post lawsuit while money flows into other projects. That's why we talk about diversification. I'm extremely bullish on XRP long term, but the stock market down 7% since September. So obviously it's not a good idea to be in the stock market, but what is not priced in yet is a huge shift that just happened that's about to blow up Bitcoin, Ethereum, XRP, in the entire crypto market. In this video, we have to talk about Ripple being on a winning streak, but why the game isn't won just yet and what to expect next. And we have to reveal some strong economic data that is suggesting higher rates, according to Fed Chair Jerome Powell. And the Atlanta Federal Reserve president says that he doesn't foresee rate cuts coming until late 2024, and how the Fed will have to engage on a growing US debt pile and what you can do to prepare for the rest of this year. So all that and more in today's video. Comment 777 if you're feeling blessed. Comment 777 if you're feeling bullish. And if you're going to become the first millionaire in your family tree, confirm it by tapping the subscribe button, tapping that like button. Let's run it. All right, bull runners, welcome back. So we have new videos coming out every single week on the channel. Make sure to subscribe if you haven't yet already. But let's dive into this. What is the huge shift that just happened that's about to blow up Bitcoin, Ethereum, and XRP? And we see it starting right now. Well, Galaxy Investment, is in a partnership with Invesco. They have their own spot Bitcoin ETF application lodged with the SEC. And this week, BlackRock, which kicked off the Wall Street Bitcoin spot ETF race in June, amended its filing, something that Mike Novogratz said highlighted the dialogue with the SEC being all headed in the right direction. It's no longer talking about how Bitcoin works or why it's important. It's just a recognized macro asset that's a huge psychological shift.
Not just BlackRock, but Fidelity and so many others have attempted, at least, or have applications in to try to get a Bitcoin ETF going. And the question is whether just because they're asking, is it going to be approved?
Yeah, it's going to get approved. We actually think, we're partnered with Invesco on an application. We think it happens this year in 2023. All the indications of dealing seem to be heading in the right direction. And
Mike, people are going to say he's talking his book. He owns a lot of Bitcoin. He wants this to happen, obviously. What would you pinpoint and specifically suggest that you're seeing around the approval process that is somehow different today than it was a year ago, than it was 2 or 3 years ago?
The most significant piece was the SEC lost in court, right? The judge had said, what are you talking about, SEC? You have a futures ETF and you're saying you can't have a cash ETF. That makes intellectually zero sense. And I think that put the SEC on the back foot. And I think Gensler needs a win. There's a tremendous amount of pressure to do something that is rational. The American public wants this. BlackRock, who's the largest asset manager in the world, is out publicly saying we're going to get this done. And it's, I can't talk specific about conversations our guys are having, and that's on the Invesco side. But talking to all the other people, it just feels like the dialogue with the SEC is all heading in the right direction.
And also, Coinbase's chief legal officer, Paul Grewal, told CNBC the exchange is confident that the US Bitcoin spot ETF will be approved by the SEC.
For example, we think it's quite positive that the U.S. Court of Appeals rejected the SEC's rationale when it turned away Grayscale's request to offer a Bitcoin ETF. We think that other ETFs are going to be coming online soon enough as the SEC follows the law and is required to apply the law in a neutral way to the applications that are pending. We think there are obviously new products and services to service the Web3 and on-chain markets that will draw further interest in crypto that have really little or nothing to do with speculating on the value of the assets and are much more about utility. So there's a lot to be excited about in crypto. It may be taking longer than some of us would like, but we do think the future is bright.
So last week, a false viral report shared all over Twitter claimed that the SEC had approved a spot Bitcoin ETF, and that spread like a wildfire. That caused a cryptocurrency rally to be triggered, but this event revealed a couple key insights. Number one, the ETF is clearly not priced in, as evident by the market's reaction to the false headline. Sean Farrell, head of digital asset strategy at Fundstat, said in a note on Bloomberg. And number two, the amount of capital flow needed to significantly move Bitcoin in this market is relatively low, as demonstrated by the sharp price movement on relatively muted volumes of inflows and fake news. And so what it does tell you is the market will head higher on any positive news, Novogratz said. So imagine what would happen when the ETFs are actually approved and that news hits the markets. Now, the real question is, what will move first, Bitcoin or XRP? It's looking like Bitcoin will move first, because even with Ripple being on a winning streak, this is not over just yet. And in my video yesterday, the SEC dismissed its case against Ripple CEO Brad Garlinghouse and their executive and chairman Chris Larsen. So rather than wait for a conclusion of that trial, the SEC decided to throw in the towel. Well, that's the theory, at least. The SEC's press didn't reveal much of an explanation on why they did this. However, the SEC also voluntarily dismissed the case with prejudice. Now, what that means is it cannot file this again. For some, those two words signal a lot. Not only is it the executive's trial completely and permanently over, but prejudice tends to come up only when a judge sees the case as frivolous or a matter that could be resolved outside of court through settlement. So in either case, whether the SEC dismissed its lawsuit to appeal a different legal matter quicker or not remains to be seen, or because it knew it didn't have a case against Ripple executives, the recent trial updates don't look good for the SEC. And of course, the legal battle isn't over yet, and decisions helpful to Ripple are still a matter that can be appealed by the SEC, dragging things out. But what happens next is Ripple and the SEC will fight over how much the crypto startup needs to pay in restitution for its $700 million plus in illicit XRP sales to institutional investors. And while almost certainly it weighed off Garlinghouse's shoulders, pretending that the SEC somehow capitulated or threw in the game and threw in the towel, is false. That's used for headlines, obviously, but nonetheless, a settlement is likely. And there's rumors spreading out there that XRP just hit $100 on the private ledger. And the private ledger, according to David Schwartz, would have the same value as the public ledger, and the price will be reflected when everything is ready.
The question is, will the value of XRP be the same in the private ledgers as it is on the public?
Yes. The value proposition of XRP is that it has these liquidity pools. If it doesn't make sense to isolate something, like there's no place where gold is worth twice as much as it is now, because if there was, people would just bring gold there and they would buy gold somewhere else and they would sell it there. Unless the only way that you can have the value be very different in two places is if there's a lot of friction. And if there's friction, someone will make a business of removing that friction. So I don't see any realistic scenario where XRP has significantly different value unless something's wrong. So like a good example of a case, there was a time where the value of XRP, they called it the kimchi premium, right? Where the value of XRP in some Asian countries was very high, but that was because there were capital controls, right? That was because things were bad. I think that's a sign that something is not going well. The value proposition of XRP is that you can take it to all of the places, right? If I sell you some gold and you say, hey, this gold can only be used in jewelry, you're like, well, that kind of sucks. I don't want that gold, right? The value proposition of gold is that you have access to the entire value proposition of gold. And so I don't see any scenario in which where it makes sense to snip pieces off, again, unless something is wrong.
Now, is this true or not? We're just going to have to wait and see, and keep an eye on the economic data that could warrant higher interest rates, according to Fed Chair Jerome Powell. So as they raise the effective federal funds rate, this increases borrowing costs for loans, and this is supposed to weigh down economic activity, which would in turn lower inflation, slower home buying, business expansion, and demand of all sorts in order to cool inflation. But so far, growth has been unexpectedly resilient. Consumers are spending, companies are hiring, and while wage gains are moderating, overall growth has been robust enough to make some economists question whether the economy is actually slowing sufficiently to drive inflation back down to the Fed's 2% target. And according to Jerome Powell, he said it may just be that rates haven't been high enough for long enough, and that the evidence is not that policy is too tight right now. It's just that rates haven't been high enough for a long period of time because they had an extended period of low rates with quantitative easing and printing massive amounts of money. And so economists are interpreting his remarks to mean that while the Fed is unlikely to raise interest rates at its upcoming meeting, which is November 1st, it was leaving the door open to a potential rate increase after that. So the Fed's final meeting of the year concludes on December 13th, and it doesn't sound like he's excited to raise rates again in November, but he may have to one more time.
So there's no precision in the in our understanding of how long lags are. One thing that has changed in the modern era is that markets now, over the course of the last 30 years, central banks have decided, instead of being secretive, to be very transparent. And what that has meant is that markets move actually well in anticipation, well before our policy moves. So the transmission from policy moves to financial conditions actually happens before the moves now, whereas that was not the case 50 years ago when Milton Friedman, coined the phrase long and variable lags. So, but now you have financial conditions changing, and the question is, how does it affect the economy? The standard channels are asset prices, interest-sensitive spending, and the exchange rate, for example. And we do see that happening, just not as fast as we would like. And I would attribute some of that to just stronger demand. Household savings were turned out to be higher. Household spending has been stronger, and that's by far the largest part of the economy. It's been a year since the last 75 basis point hike we did. It was at the November meeting in 2022. The first one was in June, so it's more than a year. So we should be seeing the effects. By the way, they don't all just arrive on one day. They arrive and then they're thought to peak and then to diminish. So there's a lot of uncertainty around lags, and one of the reasons why we have slowed down significantly this year is to give monetary policy time to work. The truth is, though, you can find academic support for different speeds and duration of lag. So we have to use our eyes and a little bit of risk management and patience in slowing down the pace to make sure that we are seeing the full effects. And I think, again, that's part of why we've slowed down this year. We went very quickly in 2022 to catch up to where we needed to be, and now we're moving carefully with these decisions.
And also the war between Israel and Gaza and the accompanying geopolitical tensions also adds to uncertainty about the global economic outlook. So these pressures right now is the reason why the stock market is down 7% since September and over 8% since the high of this year. Also, the Atlanta Federal Reserve president said on Friday that he doesn't envision interest rate cuts happening until well into 2024. Though he cited progress on inflation and a slowing economy, the central bank said there's still lots of work to do before the Fed reaches its inflation goal of 2%, and it would say late 2024, he replied when asked for a time frame when the first decrease would come, so by the end of next year. So the Fed has raised its borrowing rate 11 times since March of last year for a total of 5.25 percentage points, while Bostic said he doesn't see policymakers easing anytime soon. He has been explicit in insisting that rates have hit a sufficiently restrictive level where they don't need to be raised anymore. So right now the rates are paused. If the Fed bumps it up another rate hike and then keeps it paused and then goes into pivoting at the end of 2024, well, then is that when we could expect to see the recession? Because the past few times that the Fed has paused and then pivot, it's the pivot to lowering rates is when the crash hits the markets. And so when we look here at the US debt clock, the US national debt is at $33.6 trillion, and this is projected in terms of the gross debt to grow over $50 trillion by 2030. And so long term, I'm bullish on these markets, but it's going to be very, very volatile leading into 2025. I do expect a surge of liquidity to inflow into the market with the Bitcoin spot ETF news, but I do expect also a massive crash to take place at the same time. And the real question is, will that crash happen before the ETF news, or will it happen after the ETF news when Bitcoin is upwards of $60,000 or $70,000, bringing it back down to $50,000 or $40,000? Regardless, the most important thing to know is what to do with your money in regards to inflation to know how to preserve your wealth long term, so you don't have to worry about short-term market volatility and short-term crashes or pandemics like what happened in COVID. And so you can have more money on the front end to accumulate the dip and be able to diversify your dollars so you don't see them eaten alive by inflation. Because if in the year 2000, if you purchase an item for $1, then in 2023, that same item would cost this year $1. $1.79. So that's a cumulative rate of inflation of 78%, arguably higher than that due to price gouging, because stores like Costco, you got Whole Foods, they take advantage of this information. So they think it's justified to even charge more than the inflationary amount that they should charge. And then they blame it on inflation rather than price gouging to make more money from consumers. And so when you look at a 78% cumulative rate of inflation, that simply means bare bone basics. If you saved 100 grand in your bank account since the year 2000, then 23 years later, you would have lost $78,000 in spending power. And so you can do the math there. You'd only have like $22,000 worth of spending power after 23 years. So if you're 50 years old and you're planning on retiring at 73 years old and inflation stays above 2%, you best believe that your spending power by the year 2040, 2050 is going to be virtually nothing. So can you see why it makes absolutely no sense to hold the majority of your money in cash? Yes, it does make sense to have some, so you can have spending power to be able to buy the dip if the markets crash one more time, but it's insane. It's stupid. It makes absolutely no sense to keep the majority of your money in cash. It makes sense to have money in real estate. It makes money to have money in precious metals. It makes sense to have money in crypto right now because blockchain is the future. So if you guys want to see which projects we're the most bullish on when we release the list of the top altcoins, then go to bullrunners.com. If you want to see what we're the most bullish on for this up and coming bull run, again, don't buy, don't sell anything we talk about. We'll just show you what we hold if you want to see that. And if you want to get access, go to bullrunners.com, subscribe to our video newsletter so you can be first to be notified of our financial education platform that we're going to be launching very, very soon. And you can get information sent right to your inbox right when it comes out, so you don't have to wait for the YouTube algorithm to notify you, because we like to give you the best to help you prepare for the worst that's yet to come in this economy, so you can stay up to date with the information and back up the truck all the way to the bank, grab the bags, pack them and stack them, leave no bags left behind, because we believe that the spending power of the dollar is going down in value. That's a fact based on inflation. They're going to continue to print more money. It's going to continue to devalue the dollar. Grocery stores are going to continue to price gouge. The cost of living is going to go up. And so if you don't back up the truck, if you don't prepare, then you're not going to go camping on the beaches of the moon with us, my friend. So I will see you on the next video. I will see you on bullrunners.com so you can prepare right now. As always, you know what to do. Stay bullish.